A quiet but potentially important shift is happening behind the scenes in the XRP market, and it has caught the attention of traders, analysts, and long-term holders alike. Over the last 72 hours, more than $31 million worth of XRP has reportedly been pulled off major cryptocurrency exchanges, including Binance, Upbit, OKX, Bitget, Kraken, and Bitfinex. At first glance, that might sound like just another blockchain statistic, but many market participants believe this trend could have meaningful implications for XRP's market structure in the weeks ahead. The key question now is simple. Why are large holders moving millions of dollars in XRP away from exchanges, and what could it mean for price action moving forward? Stay with us because the answer involves exchange balances, supply dynamics, technical resistance levels, and a growing debate among traders about where XRP could be headed next. Recent exchange flow data highlighted by crypto enthusiast Diana has brought renewed focus to XRP's on-chain activity. According to information shared in her latest market update, exchange balances for XRP continue to decline, with more than $31 million removed from trading platforms within a 3-day period. Diana stated that whales appear to be moving XRP off exchanges, a development that immediately sparked discussion throughout the crypto community. Accompanying charts showed exchange volume, net inflows, and spot inflow and outflow data across multiple trading venues. What stood out most was not simply the volume being moved, but the consistency of negative net flows appearing across several major exchanges. In market terms, negative net flows generally mean more assets are leaving exchanges than entering them, and that trend has become increasingly noticeable in recent XRP trading activity. Looking deeper into the data, Binance recorded the largest XRP trading volume during the measured period, maintaining its position as one of the world's most active cryptocurrency exchanges. However, the exchange flow metrics revealed another interesting detail. Upbit displayed the largest negative exchange flows among the platforms tracked, suggesting a substantial amount of XRP was withdrawn from the exchange during the reporting window. Similar patterns appeared across other well-known trading venues, including OKX, Bitget, Kraken, and Bitfinex. When multiple exchanges simultaneously show more withdrawals than deposits, traders often pay close attention because it can indicate broader investor behavior rather than isolated activity. While individual transactions do not reveal investor intentions, large-scale movements across several exchanges often encourage analysts to explore whether long-term holding strategies or accumulation trends may be developing beneath the surface. To understand why this matters, it helps to break down a concept that often sounds more complicated than it really is. When investors leave digital assets on exchanges, those coins remain readily available for trading. But when those same assets are transferred into private wallets or long-term storage solutions, they become less immediately accessible for buying and selling activity. Think of it like moving inventory out of a storefront and into a warehouse. The inventory still exists, but it is no longer sitting directly on the shelf waiting for a transaction. This is one reason exchange balance data has become an important metric in cryptocurrency analysis. While exchange outflows do not automatically lead to price increases, they can reduce the amount of supply available for immediate market activity, especially if withdrawals continue over an extended period. The broader spot inflow and outflow chart shared alongside the data paints an even more interesting picture. Much of the visual record was dominated by negative net flow readings, showing that withdrawals frequently exceeded deposits across numerous trading sessions. This was not a one-day event or a brief anomaly. Instead, the chart suggested that exchange outflows have remained a recurring feature of XRP market activity for a considerable portion of the observed time frame. At the same time, XRP was trading near the $1.20 level when the data was captured. Despite episodes of volatility and changing market sentiment, the withdrawal trend remained visible throughout much of the chart. For investors following XRP closely, this creates an important narrative. While prices fluctuate, exchange balances have continued moving lower. As this data circulated, traders quickly began connecting exchange activity to key technical levels on the XRP chart. One market participant known as Nick focused attention on a critical weekly closing level around $1.18. According to the trader, a weekly close above that area would strengthen the bullish case and potentially improve the chances of XRP making another move toward the $1.30 resistance zone. On the other hand, a weekly close below that level could reinforce bearish pressure and challenge bullish expectations. This highlights an important reality in financial markets. On-chain data and technical analysis often work together. Exchange withdrawals may provide one piece of the puzzle, but price confirmation through chart levels is still necessary before traders gain greater confidence in a directional move. At the same time, Diana shared another market observation focused specifically on XRP's technical setup. According to her analysis, XRP appears to be preparing for another test of the critical $1.30 resistance area. She noted that the Ichimoku cloud had turned green, a development many technical traders view as a signal that short-term trend conditions may be improving. In addition, she pointed out that an oscillator indicator was recovering from a recent decline, potentially suggesting that buying pressure could continue building into the next resistance test. For viewers who may not follow technical indicators every day, these tools are often used to measure trend strength and momentum. They do not predict the future, but they help traders assess whether market conditions are becoming more favorable for buyers or sellers. The significance of the $1.30 level cannot be overstated within the current XRP discussion. According to Diana's observations, a decisive close above that resistance area could open the door to higher targets between $1.34 and $1.36, followed by potential moves toward $1.47 and eventually $1.65. However, she also emphasized an important cautionary point. This resistance zone has rejected price advances multiple times before, meaning traders should remain alert for the possibility of bearish divergence or another failed breakout attempt. In other words, while optimism is increasing among some market participants, the chart has not yet delivered definitive confirmation. That is why so many eyes remain fixed on the next test of resistance. One of the most talked about reactions to the exchange flow data came from market participant Viori Trading, who suggested that a potential supply shock could be developing. The term supply shock is commonly used when available market supply decreases while demand remains steady or increases. If fewer coins are readily available on exchanges and buying demand continues to grow, price pressure can potentially emerge. It is important to stress that this remains an interpretation rather than a guaranteed outcome. Markets are influenced by many factors, including macroeconomic conditions, investor sentiment, regulatory developments, and broader cryptocurrency trends. Still, the supply shock narrative has gained attention because it directly connects exchange outflows with a possible tightening of available XRP liquidity on trading platforms. You might be wondering, if you hold XRP, why does all of this matter right now? The answer lies in understanding how multiple market signals can combine to shape future expectations. Exchange balances are falling. Large holders appear to be moving significant amounts of XRP into wallets away from trading venues. Technical analysts are watching key support and resistance levels. Momentum indicators are showing signs of improvement, and traders are debating whether a supply shock scenario could eventually emerge. None of these factors alone guarantees a major price move, but together they create a market environment worth watching very closely. When several indicators begin pointing in the same direction, investors naturally pay more attention to what happens next. As we move forward, the biggest question will be whether this withdrawal trend continues. If exchange balances keep declining while XRP approaches major resistance levels, market participants will likely become even more focused on the relationship between available supply and investor demand. At the same time, traders will continue monitoring weekly closes, volume activity, and broader crypto market conditions for confirmation. The next few trading sessions could provide important clues about whether XRP is building momentum for a stronger move or simply experiencing another temporary shift in exchange activity. Either way, the data shows that something noteworthy is happening beneath the surface, and the market is paying attention. In the end, the story here is not just about $31 million leaving exchanges. It is about what that movement could represent. It is about investor behavior, market confidence, supply dynamics, and the ongoing battle between buyers and sellers at critical price levels. XRP remains one of the most closely watched digital assets in the crypto market, and developments like these help explain why. Whether the current trend ultimately supports a breakout above $1.30 or simply becomes another chapter in XRP's market journey remains to be seen. What is certain is that exchange flows, whale activity, and technical levels are now converging into one of the most closely monitored XRP narratives of the moment. If you found this update valuable, make sure to subscribe to XRP Economic Radar, give this video a like, share it with fellow XRP holders, and let us know your thoughts in the comments. Do you believe these exchange outflows signal long-term confidence, Or are traders reading too much into the data? Stay connected because we'll continue tracking every major XRP, Ripple, and crypto market development as it unfolds.